Okay, so in the last lecture, what we had looked at was the calculation of the predetermined allocation rates. So remember, we had used this formula, which says to take the budgeted manufacturing overhead and divide it by your chosen basis. We looked at all 5 of the different chosen bases up here, and we calculated what the value would be if we had to use any one of them as the chosen basis. So we looked at the fact that, remember I said to you, it's very important that you note the unit of measurement. So if it's based on unit of production, it's stated as a rand per unit. If it's based on labor hours, it's rand per labor hour. If it's based on machine hours, it's rand per machine hour. And then if it's based on a cost, whether it's labor costs or material costs, it's going to be percentage of labor cost and percentage of material costs. And that's very important because when you're applying this application or allocation rate in the final step, you're going to see that whatever the whatever the unit of measurement was, whether it's a percentage or rand per unit, per labor hour, and so on, you need to apply that respectively. Okay, so we looked at how to calculate that, and then I also said to you that this formula at the top is very important. The one that says to you to calculate the total cost, you would take the direct material, add your direct labor, and add on your applied overhead. This bit where it says add on your applied overhead, the third part of it, is where we take the allocation rate that we had calculated from this page. So this value here, you take this allocation rate and you literally apply it. So I said to you, for instance, let's suppose that you have calculated the rate to be, let's say it was based on units of production, and you said that it's 2 rand per unit. So what you would then do is say that if product X had 5,000 units that were being produced, to calculate the applied or allocated overhead, it would be 2 rand per unit multiplied by 5,000 units being produced, and that would be a total overhead of 10,000 rand. So you get the idea of how it would work? Okay, so that's exactly what we're doing in question 5.12 now. So have a look at it in your textbook. It says to you, you are supplied with the following budgeted and actual information of 3 companies, company X, Y, and Z. So I'm just going to switch to the whiteboard here so that I can write down the answers for you. And you will follow the question in your textbook. So they gave you 3 companies here, and they were telling you that you would need to, so at the very top, they gave you budgeted results. Please write down next to budgeted results that you're going to use the information from this table to calculate the allocation rate. So the budgeted results are used to calculate the allocated rate. Then they gave you actual results at the bottom, and this is what you're going to use to determine the applied overhead. So used to determine the applied manufacturing overhead. And then they said to you below this that these companies all use predetermined allocation rates to apply overheads over the year. They said to you then that company X uses labor cost as a basis. Remember, I showed you this in the previous lecture. So company X uses labor cost as a basis. Company Y uses labor hours as a basis. And company Z uses units of production as a basis. We're going to use those to calculate the allocation rate. Also, when we are applying it, we'll have to look at in particular what the basis was. Then they said to you, for each of the companies, calculate the following: the allocation rate used during the year, then the total manufacturing cost as calculated during the year, and then determine whether the manufacturing costs were over or under applied during the year. Okay, so the first thing that we're doing is we're calculating the allocation rate during the year. So to calculate the allocation rate, we said that the formula for it is to take your budgeted overheads and divide it by whatever the chosen basis is. So budgeted overheads divided by the chosen basis. So in this case, for company X, and you must obviously then calculate it for all of the companies, unless they say to you do it for only one company. You might find in an exam, because it can be quite time consuming to do it for all of them, they might just say to you calculate the values for company X or company Y and so on. So for company X, it's taking your total budgeted overheads, which if you look at the table at the top now, they had given you the budgeted variable overheads and the budgeted fixed overheads. Remember I said to you, if they separate them, then your numerator here, where it says budgeted overheads, is the sum of the variable and the fixed overheads. So you're going to sum up the variable and the fixed overheads. So for company X, the variable overheads from the table at the top is 260,000 as the variable, and the fixed is 120,000. That's your numerator. You're fine with where we're getting the information from? Anyone confused? So that's your numerator. You must show individually that you sum these up, because there would be a mark allocated to this, there would be a mark allocated to that. So please show it, don't just write down the total. And then you have in your denominator whatever the chosen basis was. So for company X, your chosen basis, they said to you just below the actual results table, what was the basis for your overhead rates or your application allocation rates for company X? Yes, they said to you in the first bullet point below the actual results table that company X uses labor costs as a basis. So you're going to go back to the table at the top, because this is what we use for your allocation rate. And what is the budgeted labor cost for company X? Yes, 95,000 Rand is your budgeted labor cost. So you're going to divide that by 95,000 Rand. And remember, when the basis is labor costs, it's expressed as a percentage. So you would need to then multiply by 100. So this multiplied by 100 gives you a figure of 400% of your labor costs. Please don't be alarmed if it's a very high percentage. That's perfectly fine and normal. So 400% of labor cost is your first predetermined allocation rate. Then you have for company Y, so same idea, it's going to be the variable and the fixed overheads. So for company Y, what are your variable and fixed overheads? Yes, 150,000 and 160,000 from the table at the top. And then the basis upon which you are calculating your overhead is what for company Y? Yes, labor hours below the table. They said to below the second table, they said to you company Y uses labor hours as a basis. So back to the table at the top, the number of labor hours now for company Y is 31,000 hours. Please let me know if you are having a difficult time with locating any of these figures. I will explain it to you. So this is expressed as a rand value. So it will be 10 rand per labor hour. Okay, and then company Z, exact same thing. You're going to look at your question, and for your variable and fixed overheads, it is 200,000 for variable and 100,000 for fixed. And then your denominator is the chosen basis for company Z, which is units of production. So you'll go back to the table at the top. The number of units produced for company Z is 150,000 units. So this is saying to you then that it is 2 rand per unit produced. Okay, you're fine with the basis for your allocation rates and how those are calculated? No questions? Okay, so that's question 1. We're going to use this now in question 2. They asked you to calculate the total manufacturing cost as calculated during the year. So we saw in the slides, and you can also turn back to page 156 in your textbook. In the middle, halfway through the page, we said that to calculate your total manufacturing cost, it is the sum of your direct material plus your direct labor plus your manufacturing overheads. We're going to now add up these three to tell us the value for question 2. And remember, next to the second table, your actual results, I told you to write down that this is what we will use to calculate your applied overhead. So all the information from the second table is now used for question 2. So ignore the first table entirely. It's just the actual results table we're working with. So we're calculating the total cost for, and I'm going to write down here, this is question 2, for products or company X, Y, and Z. So I'm going to just do this in table format, but you don't have to do it in table format. I just don't have much space here. So this is company X, this is company Y, and this is company Z. We're going to sum up direct material, direct labor, and your applied manufacturing overhead. And that's going to tell us at the end here what your total cost for that for that specific company is. So for your direct material, you're literally just looking at the second table with your actual results. You're still taking this table down? Do you want a minute? Okay. Okay, so as I said, in the table, you have the direct material plus the direct labor plus your applied overheads, and you're doing it for all three companies. So for the first company, your direct material, only look at the actual results table from the question. What is the direct material cost? Yes, 184,000 is the direct material cost. The direct labor cost is just above that, which is 96,000. This is just for company X. And now for your applied overhead, we're going to look at what was the rate that we calculated at the top, which was here. It said 400% of the labor cost. So the labor cost we just did here, we saw was 96,000. It's now going to be 400% of that. So you're going to show the working out. You're going to say 96,000 times your 400%, and that's going to give you a total figure of 384,000 Rand as your applied overhead. You're fine with that? Any questions? So now for your total, you're just going to sum up the material, the labor, and this overhead of 384,000, and altogether that gives you 664,000 Rand. So that's your total manufacturing cost for company X. For company Y now, exactly the same process, the direct material from that second table. The material is 128,500. The labor just above that is 48,200. And now in terms of your rates, they said to us here, please watch for a second so you can see where we're getting it from, then you can take it down. So this allocation rate that we calculated at the top, it said 10 Rand per labor hour. So you're going to say it's 10 Rand per labor hour, but how many labor hours were used? So in your actual results table at the bottom, you'll go to labor hours. It's the third item. Now for company Y, the third item tells us that it was 32,100 hours. So that's 10 times 32,100. And then that will be 321,000. And now you will sum up the material, the labor, and that overhead, and that tells you that your total cost is 497,700. And then the same for company Z, it's going to be the material cost of 202,000 plus the labor cost just above that, 63,800. And then now for your applied overhead for company Z at the top, we calculated it's 2 Rand per unit. So it's 2 multiplied by, let's look at how many units were produced. Yes, 143,800. So that's going to be 287,600. And those three then added up gives you a total cost of 553,400. Okay, so that's question 2 done. You're fine with that? No questions? All right, so the last question then said to you to calculate whether the manufacturing costs were over or under applied during the year. So remember I had said to you that when we look at over and under application, and we saw this in the last lecture, we said that in terms of over and under application, we need to look at what was the actual overhead for the year versus what we had allocated to your overheads. So I'm just going to clear this at the top so we have some space, but you're going to use the information from question 2 here to answer this question. Okay, so remember I had given you, oh gosh, I hate when it does this. Okay, so remember I had given you the example in the previous lecture, and I said if you compare the actual overhead to what we had allocated or applied to overheads. Let's suppose that we had allocated 20,000 Rand to overheads for the year, but overheads actually ended up being 25,000 Rand. That means it ended up being more than we had allocated to your overheads. So the difference between the two, which is 5,000 Rand, is going to be a negative because it ended up being more than we had anticipated. And that ends up being an additional expense to the business. And when it's an additional expense to the business, it is seen as being undercosted, meaning we had under allocated funds to the overheads. And in this case, when you undercost, the rule is to debit cost of sales and credit the manufacturing overhead account. So this is when it was under allocated or under applied or under costed. Then you had the other scenario where, let's suppose your overheads, we had applied maybe 30,000 to it. So let's suppose, okay, let's say 35,000. We had allocated 35,000 to your overheads, but it only ended up being 25,000. So the 10,000 Rand difference is a positive figure, and this is seen as over allocation or over costed or over applied. This means we allocated too much, and the entry here is the opposite. Instead of debiting cost of sales and crediting overheads, we do the opposite. We debit overheads and we credit cost of sales. Now, this is what we're looking at in the last question here. We want to look at what was the difference between the actual overheads for the period versus what we had applied, and is it over or under costed? So let's look at that. Now for company X, Y, and Z, the last item here, this was your applied overhead. So I'm going to write down at the top that for each of them, this was the applied, and then we look at from the table what the actual figure was. So for company X, your applied overhead was, so it's actual versus applied. We know the applied, we just calculated it. For X, it was 384,000. For company Y, it was the 321,000. And for company Z, it was the 287,600. You're fine so far? Okay, for company X now, for your actual, all you're doing is looking at table 2, the actual results, and the actual overheads is now the sum, because they have separate variable and fixed. You will sum up the variable and fixed, and that will tell you the actual total overhead for each company. So if they didn't mention separate variable, separate fixed, they would have just said actual overheads, and you'd use that entire figure. So here for company X, the actual overheads is the sum of the 280,000, which is the variable, and the 132,000, which is the fixed. So here for company X, the actual is equal to 412,000, and you're comparing that to now the 384,000. The same for company Y. We'll do the comparison just now. Let's just work out the actual figure. So for company Y, it's 140,000 plus the 156,000. And that is 296,000. So it's this versus this. And then for company Z, it's the 212,000 plus the 78,000, and that is 290,000. So 290 versus the 287,600. Okay, so for company X, the actual was 412,000, the applied was 384. So is that an under or over application? That means we only allocated 384,000 Rand, but it actually ended up being 412,000. Under. It's under application because we allocated less than it ended up being. It ended up being 412,000, but we had only budgeted for it to be 384,000. So we had under allocated. So when it's under allocated, it would be stated within brackets. So this is a negative 28,000 Rand. You'll work out the difference between the two figures. a negative 28,000 Rand, and it will be under allocated. So you must answer it exactly as you see up here. Show the actual, show the allocated or applied, and then work out the difference and state whether it's actual or whether it's under or over allocated. Then for company Y, we allocated 321,000 to it, but it ended up being 296,000. So is that over or under allocation? Over allocation, because we allocated more to it, but it ended up being less. So the difference between the two, which is 25,000 Rand, is a positive, so you won't write it within brackets, and it is over allocated. And you must state that. And then the last one for company Y, it ended up being 290,000, which is here, the actual, but we had only budgeted for it to be 287,600. So is that an over or under? Yes, an under allocation, and the amount is 2,400 within brackets, and you'll state that it's under allocated. Okay, any questions here? All right, so you can have a quick break, a quick one though, please. And then we will, when you get back, look at the last part of Learning Unit 5. So the last section of Learning Unit 5 is called Activity-Based Costing. And it is a bit of a long section. So what I'm going to do is I'm not going to work with the example from your textbook. It is a very long and a very complicated example in your textbook because there are several different tables that you'll need to draw. So I'm going to work with a question from a past paper instead. It's from last year's exam so that you have an idea of how they realistically test it, because the one in your textbook, obviously it is, although it is a 3 hour exam, this question alone is bound to take you about 45 minutes to an hour. So it's not realistic. They're obviously not going to give you something that is as long as this. So this is why I would prefer to go through the one in the exam from last year, so you know the typical way that they ask you a section like this. Okay, so the section activity based costing is where you're going to find that we take an overhead cost and we assign them on the basis of the activities that are consumed by a particular product. What we mean by that is, for instance, let's suppose that in order to produce one item, there needs to be a setup of a machine or an inspection that needs to be done or some sort of order that needs to be placed and so on. There's different activities that need to be performed in order to produce a particular item and sell it off. And this is what we're looking at under activity-based costing. What are all the different activities that go into the costing, into the production process? And then let's assign costs on this basis and work out the total cost of production. So in the first point here, it says to you exactly that. It says to you that under activity-based costing, it is a cost model that is used to assign overhead costs to different products produced by a manufacturing entity, and it's based on the activities that are consumed. And the idea is that all of these activities cost money. So we obviously need to be able to correctly cost an item by looking at the activities that had taken place in order for it to be produced. So that's what we're looking at under activity-based costing. And you're going to see that we will come across something called a cost pool. So a cost pool is where we're basically grouping like activities together. Literal to the word pool, we are grouping them together. So any activity that is common is going to be grouped together, and like that will determine the total cost of the activities and then for the product as a whole. So under activity-based costing, we are going to, so this theory I'm not going to go through with you. We're going to look at the difference between your activity-based costing and the traditional method. So the traditional one I am going to do in the textbook with you, the first part of example 5.7, but the ABC method, the activity-based costing, I'm going to project an example that I'll be working with you. The example is also on VC Learn, so you can download that here. So under the traditional costing method, this is pretty much what we did just now in the other example. It is looking at how to calculate a traditional cost by taking the direct material plus your direct labor plus your manufacturing overhead. Now, in terms of your manufacturing overhead, because we are looking at assigning overhead costs, it's very similar. If you remember in the previous lecture, we did the direct method. Remember, we looked at the direct method, the step method, and the linear algebraic method. When we calculate the overhead costs under the traditional costing method, it is very, very similar, almost identical to the direct method that we saw. So we're going to repeat it. We'll look at that very quickly here. And then we look at the difference between the traditional method versus the ABC method. So under your traditional method, we're going to look at the first part of example 5.7. And then when we get to the ABC method, these are the 5 steps that you're going to follow. Now let's look at the 5 steps, and then I'm going to tell you of these 5 steps, which ones you're actually going to do. So the 5 steps involved in activity-based costing is the first step is to identify all the activities that go into the production process. Like I said to you, maybe one machine needs to be set up, maybe there needs to be an installation or an inspection carried out and so on. This will be given to you, so you do not need to actually do that. A typical question will tell you what the major activities are, so you don't need to actually do this step. The second step as well will also be done for you. It will be provided to you, where you are going to look at each of those activities and determine their total cost. So that will also be given to you in a typical question. Then step 3, sometimes you will have to do it, but most times they give this to you as well, where you will have to determine the total volume of a particular activity and the cost incurred with it. So in step 3, we're determining the total volume of the activity. So here, as I said, sometimes it's given, sometimes you'll have to calculate it. Your work actually starts at step 4 only. So step 4 is where you calculate something called the cost driver rate. What the cost driver rate is, please can I ask you to close the door at the back and the one at the front also? So with your cost driver rate, what it is it's telling you that this is the activity that caused the cost to be incurred, and this is what the rate of that specific activity is. Thank you. Thank you. Okay, so the cost driver rate, as I said, is looking at this is the activity that had been carried out. This is the cost of that specific activity, and it's calculated as the total cost divided by the volume. So basically here, if you look at this, the total cost was determined in step 2, which is the numerator here for the cost driver rate. The total volume was determined in step 3. So it's actually the value from step 2 divided by the value from step 3 to get to your cost driver rate. So once you have that cost driver rate, in the 5th step, you're going to apply that cost driver rate. Just like we did in the example we worked with right now before your break. Remember in the last step or the second last step, to get to the applied manufacturing overhead, we said that, for instance, if it was 2 Rand per unit, we multiplied it by 5,000 units, and that told us that the total cost was 10,000 Rand. That's the same thing that we're doing in step 5 here. So it's taking the rate and multiplying it by the volume. So these are the 5 steps that will be carried out. Step 1, 2, and sometimes step 3 are done for you. Your work is only for step 4 and 5. So these are the steps that we're going to follow as well when we're working with it, the example I'll upload. Let's look at in your textbook though for the traditional method, how it's carried out. So everything that I explained to you is here as well on the next couple of slides. You can read through that. And then on the last slide, it has advantages and disadvantages of the ABC method. So please also make note as well. They generally do ask this. It's a commonly asked theory question, the advantages and disadvantages. So please make note of those. Okay, so example 5.7, I am going to project it here so we can see what we're working with. So remember, the idea is with the traditional method that it'll be the same as the direct method that we saw in the previous lecture. If you remember, with the direct method, we said that there were service departments and there was production departments. So here, the service department will allocate its costs to the production departments, and it's only in this way that the costs get allocated. It's never going to be from production to service. It will never be that. It'll only be that the service department's costs get allocated to the production departments. So it's exactly the same thing that we're going to do here. So they say to you in example 5.7 in your textbook, Jomo Pty Limited manufactures three products, X, Y, and Z, which pass through two production departments, which are the assembling and the machining department. And they have three service departments, which are receiving, packaging, and maintenance. So three service departments, two production departments. Then they've given you a whole host of information on the next couple of pages. So I'm just going to zoom in here so you can see that. So at the top here are the total overhead costs for both the production and the three service departments. So these are the two production departments, assembling and machining. These three are your service departments, receiving, packaging, and maintenance. These are the total costs for each department. Then they said to you, and this is what we will use for the traditional method. So in your textbook, please write that down. For this table, we will use it for the traditional method. What we're going to do is, they're saying to you in this table that the service departments are allocated to production on the basis of estimated usage as follows. So it's saying when we're taking the service department's costs and we're allocating it to the production departments, this is the percentage according to which we allocate the costs. So basically for the receiving department, here's its total cost at the top here, 252,000. It's saying to you that of the 252,000, 45% is going to the assembling department, 55% is going to the machining department. So you're going to take the 252,000 Rand and you're going to allocate 45% of it to assembling and 55% of it to the machining department. The same with the other two, with the packaging department, the total cost is 228,000. You're going to split it. 60% will go to assembling and 40% will go to the machining department. And then the same with your maintenance. 504,000 is the total cost. 35% of it will go to the assembling department. 65% of it will go to the machining department. You're fine with that? No questions here? Okay, so let's look at how they did that. It's also the same type of table that we drew up under the direct method. Remember, under the direct method, we said that the total cost is calculated by taking the primary cost of the department or the primary allocation together with any secondary allocations. The secondary allocation is what we did here now at the bottom when I showed you how to split up those percentages. The primary allocation is the department's own cost. So here on the next page, you're going to see that for the traditional method, you're going to show the department's own cost here. So you can say direct cost. Please write that down. Next to manufacturing costs. So the service department's costs are allocated to the production departments. So we put in the production departments as the headings here, assembly and machining. We put in its own cost, its direct cost. This 456,000 for assembling came from the previous page here at the top. Assembling was the 456,000. They would have given you that. The same with machining, it was the 540,000 Rand. That's their own cost. So this is why we entered it here, 456,000 and 540,000. So that's their primary cost. Over and above that, it's going to now be allocated. So as I said, total cost is the primary, which is their own cost, plus the secondary cost. So now the secondary cost is the one I had explained to you. We're starting off with the receiving department. So the receiving department we saw on the previous page, its total cost was from here 252,000 rand. We're going to take that amount and we're going to split it according to the ratio that they told us here. 45% to assembling, 55% to machining. So you're going to say the 252,000 rand. Oh, sorry, I forgot a zero there. So 252,000 rand. You're going to split it between assembling and machining. The ratio told us 45% will go to machining, 55% will go to, assembling, and 55% to machining. So you literally will take 252,000, multiply it by 45%, and that gave you the 113,400. Then again, 252,000 times 55% for the machining department, and that gave you the 138,600. The same now for packaging from the previous page. You're going to now look at what was the total cost for packaging and how was it split. This was the total cost, 228,000 rand. It is split here, 60% to assembling, 40% to machining. So you'll go to the information, you'll go to the table here. The amount that's being split is 228,000 rand. You're going to say 60% is going to the assembling department and the machining department is 40%. So 228,000 times 60% gave you, in line with packaging here, to the assembling department, 136,800. And then 228,000 times the 40% tells you that to the machining department, we're allocating 91,200. Then for your maintenance department, exactly the same thing. The cost of the maintenance department is 504,000. 35% is going to assembling, 65% is going to the machining department. So here, again, you're going to split the amount. So of the 504,000 rand, you're going to say that 35% is going to the assembling department, 65% is going to the machining department. So 504,000 times 35% gave you the 176,400, and 504,000 times the 65% gave you the 327,600. You're fine with those? Okay, so all you're going to do now is add up the total, to give you the total cost, the primary and the secondary. So you're going to add up the primary costs and the secondary costs. So for the assembling department, it's going to be the primary cost of 456 plus the 113,400 plus the 136,800 plus the 176,400, and that gives you that total overhead of 882,600. And the same for machining, the primary cost together with the secondary, and that gave you the 1,097,400. Once you're done with that, at the moment, it's a total overhead allocation. You are now going to bring that to, if you look at, let's look at this table. Okay, so the third table on this page, it's page 163. The third table, this one here, it says to you that the total of the total, The details of the total product usage and related inputs are as follows. This is how many units each product has. It's 6,000 units that were produced for X, 24,000 units of Y produced, 48,000 units of Z produced. Then they said to you that this is the assembling department. The assembling department is based on the number of total labor hours. So what it's saying to you here is that the total labor hours for product X is 12,000. The total labor hours required for product Y is 48,000, and for Z we need 96,000 hours. Then the same for the machine department. It's telling you the total machine hours needed for product X, 24,000, for product Y, 72, and for product Z, 192. What we're going to do here is we're going to work out, this is a total labor hours required. We're going to work out how many labor hours are required per unit. So you're going to say if it's 12,000 hours needed in total, we need to say to get to a per unit figure, we always take the total and we divide it by the number of units. So the total is 12,000, the number of units is 6,000. So that tells us 12,000 divided by 6,000, we need 2 labor hours per unit. The same for Y. In total, it's 48,000 hours that are needed. We are producing 24,000 units. So 48,000 divided by the 24,000 tells us that we also need 2 labor hours per unit. And the same here, 96,000 divided by the 48,000 tells us that we need 2 hours per labor, 2 labor hours per unit. You're fine with how many labor hours are needed? Okay, the same for this machine hours. It is 24,000 in total for all 6,000 units. So we want to know for one single unit, what is the machine hours needed. So 24,000 divided by the 6,000 tells us that it's 4 machine hours that are needed per unit. Then 72,000 divided by the 24,000 units tells us that it's 3 machine hours needed per unit for Y. And for Z, it's 192,000 divided by 48,000, and that is 4 hours needed for for Z. So this is the number of units needed, the number of labor hours needed per unit, the number of machine hours needed per unit. Then you're going to now, the reason I was explaining this to you is because you're going to need it for the next part of that traditional method. So remember I said to you here under the traditional method that as it stands, this is a total overhead allocation. So this is where we are currently at. The first thing we need to do is we need to work out for the assembling department, which is based on labor hours. We already saw that just now. And the machining department is based on machine hours. We need to know, instead of a total for these, let's bring it to a per hour basis. So it's based on labor hours. So let's work out a labor hour cost. And then let's work out a machine hour cost. So at the moment, it's 882,600 in total. To bring it to a per hour basis, again, we'll take the total and we'll divide it by the total number of hours. So 882,000 is the total assembling cost. Now we need to know how many labor hours were there in total, and that came from this column here. That total of 156,000, that's going to be your denominator. So divide it by 156,000, and you'll see that here as well. They've shown it to you in the table. And that tells you that for 1 labor hour, it costs 5 Rand 66. You're fine with that? No questions? Okay, then the same for your machining department. We know that the total is 1,097,400. You now need to look at how many machine hours were there in total. And that again came from this table. Here's the machine hours. Here's the total of the machine hours at the bottom. That's 288,000. So you're going to now divide this by 288,000. And that's going to tell you that, so here it is here, 1,097,400 divided by the 288,000. That tells you that the cost of 1 machine hour is 3 Rand 81. You're fine with that so far? Okay, so I'm going to write here, and please enter this in your textbooks as well. This is the cost for 1 labor hour. And this is the cost for 1 machine hour. So you've worked out the per hour cost for machine and for labor hours. The last part of it under the traditional method is if this is the cost for 1 hour, we need to know, remember we had calculated here that X required 2 labor hours, Y also required 2 labor hours, and Z also required 2 hours. And for machine hours, it was 4 hours required for X, 3 hours required for Y, and 4 hours required for Z. We want to know what is the total cost for these. We said 2 for X, 2 for Y, 2 for Z for labor. So we wrote that down here at the top. As you can see, labor hours. For X, it's 2. For Y, it's 2. For Z, it's 2. We just copied that from that page. The same for your machine hours. We copied from here. It was 4 for X, 3 for Y, 4 for Z. So again, you just copy that here. At the top, it was machine hours, 4 for X, 3 for Y, 4 for Z. You're fine with where we got that from? Okay, so that's the requirement for each product. And now we calculated that for 1 labor hour, it's 5 Rand 66. So we're going to say here that if it costs 5 Rand 66 for 1 hour and we need 2 hours, then 5 Rand 66 times 2 gives us the labor overhead cost here. So this labor overhead cost is calculated by the cost of 1 hour times how many hours we need, which is 2 hours, and that gave you 11 Rand 32. The same here for Y. Each hour costs 5 Rand 66. We need 2 hours, and that's 11 Rand 32. And again here, each one costs 5 Rand 66. We need 2 hours, and that's 11 Rand 32. That's your labor. Then your machine hours, we had determined that it costs 3 Rand 81 for 1 machine hour. So on the next page, if 1 hour costs 3 Rand 81, then for X, we need 4 hours, so it's times 4 here. For Y, we need 3 hours, so it's times 3. And for Z, we need 4 hours, so it's times 4. So that's how we got to the 15.24, the 11.43, and the 15.24 here as well. So at the end, you're going to sum up these two. So 11.32 plus the 15.24, and that gave you the 26.56. The same here, that and that added gave you the 22.75, and then that and that added gave you the 26.56. You're fine with the traditional method? It is a bit of a long process, as you can see, but as I said, most of the time they only give it to you for one single product. So it's not going to be for X, Y, and Z because it is very time consuming to do that. So I'm going to stop here because I don't want to start the ABC method and then not complete it. So when I see you again next week, I will do the ABC method with you and we'll start with learning unit 6.